Hey, welcome back to YT Finance, and today we are talking about SoFi Technologies SoFi stock and Palantir Technologies PLTR stock. As always, we're going to be going over their latest news updates, price predictions, and we are also going to discuss whether or not we should continuously buy these companies ahead of both of their earnings reports. So for more videos on SoFi Technologies or Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below about either of these two stocks, subscribe if you are new, and without further ado, I say let's jump in to today's stories. So we're going to start off talking about SoFi Technology stock and how this very bearish reporter has repeatedly talked poorly about SoFi stock, and I have repeatedly had many rebuttals to him. SoFi Technologies is a fintech company or a finance technology company that gives their consumers an all-in-one inclusive digital app that gives them access to various financial services and financial products. Currently, the SoFi stock price is trading at $5.14, while analysts believe the company should be trading anywhere between $6 and $11 over the next 12 months. So let's dive into what this very bearish negative article is saying about SoFi Technologies to see if there are any good points that we could learn from. Well, he points out correctly that SoFi is about to release their Q3 earnings report on November 1st. And this has caused quite a stir in the overall stock price and investing community regarding SoFi stock. Many bullish positive investors regarding SoFi anticipate that the fintech company will beat current projections and expectations among professionals and therefore increase the overall stock price after their earnings report. However, the author points out that this is questionable whether or not an earnings beat or a revenue beat will result in a higher price point and a higher stock price after the earnings report, considering the current negative macroeconomic environment. He reminds us that yes, SoFi will be releasing their earnings report on November 1st, but the results will not necessarily be positive. Right now, we actually don't know whether or not they will release earnings beats or not. Currently, analysts forecast that they will bring in revenues of close to $392.76 million for the quarter and post negative earnings of a loss of 10 cents per share in terms of their EPS or earnings per share. This revenue estimate, if it were correct, would represent a 56% jump from the prior year's Q3, but their earnings would represent a loss of 100% compared to Q3 of 2021. So this is kind of a mixed basket here. Even if they do end up performing very positively in terms of the revenue, their earnings per share is not going to sit well with investors. The author also points out that the short interest in SoFi Technologies has dropped from around 130.4 million shares down to around 96.6 million shares, and I find that very positive in terms of this overall stock. Now, he goes on to say that if the stock price does surge after November 1st, that this is going to be a temporary comeback for SoFi Technologies. The stock price will then later be beaten down, and investors should not start to invest heavily back into the company because this is not a rebound due to the macroeconomic environment, and until the overall economy recovers, SoFi Technology stock won't recover, and I actually agree with him in that particular regard. Now, overall, I do think that the earnings report will be either mixed or positive. I don't think that they are going to miss on both their earnings as well as the revenues, but we are just going to have to see. If you want to trade off of this momentum, feel free to do that, but always remember to be careful and don't over allocate yourself to singular growth companies. The next article we're going to be analyzing is if SoFi stock is a buy considering the upcoming earnings report and the recent pullback that we've received in the stock price. Now, TipRanks actually likes SoFi Technologies, rating it either between an A+ and an A- rating due to their amazing growth prospects for the future. If we recall from Q2, SoFi delivered revenue growth of 57% of $362.5 million, mainly due to personal loan originations. And if you recall, I did a whole video breaking down the personal loan originations, and if we can get through Q4, Q1 and Q2 of 2023 are set to be phenomenal, so feel free to look forward to the first half of 2023. SoFi ended quarter 2 with around 4.3 million members, which represents an increase of 69% year over year. So clearly this company is rapidly adding members and increasing their revenue. Also, I'd like to say that I do believe that SoFi stock is a good investment, even though I only have a 4% allocation to them, but even a Mizuho analyst has a buy rating for the company and a price target of $8 per share. He says, and I 100% agree with this analyst, that he says their business model is resilient and they have a strong execution, alluding to their overall customer base, which not only make well over 6 figures, but they all have very impressive FICO scores on average, which means that they are very unlikely to default on their loans or have any type of delinquencies in terms of their loaning and lending products. Overall, Wall Street is positive and bullish on SoFi Technologies because they do give this company a buy rating with an average stock price of $8.38, which would imply around 68% upside if you decide to invest right now and hold for the next year or two. Also, lastly, for this company, I want to add that hedge funds and smart money are buying up SoFi stock even though the recent stock price has pulled back, and they've added around 15.3 million shares just in the last quarter. So you definitely know that you're onto something when smart money starts to buy companies like SoFi Technologies. So that's definitely something to think about. Moving right along here, we're going to talk about Palantir Technologies to say if Palantir is a stock to buy right now. And if you didn't know, Palantir is a big data and analytics company that serves both commercial enterprises as well as government agencies. Recently, the stock price has been absolutely plummeting for over the past year, but they are very competitive in their particular space. Palantir's deal value has remained relatively flat at $3.5 billion in quarter 2 compared to quarter 1, but I actually think if we go into 2023, the deal value will increase as they further integrate themselves in various relationships and network themselves further into the United Kingdom as well as the United States. They are also growing at a very stable rate, and their future revenue growth will reflect their current deal value, so we want that deal value to increase further. Now, despite this, they are slowing on the top of the line growth, which I will point out later, because originally they were supposed to be growing at a 30% CAGR in terms of their revenue, which is their compounding annual growth rate, but they're only growing right now at around 25%. So that's a 5% compounding decrease, which is very, very bad. But with that being said, 25% in terms of a compounding annual growth rate from now until 2025 is still very strong, and we will dive into that later. However, this particular author believes that staying on the sidelines right now and just holding the company, even if you're already invested into this company, may be the best and most responsible choice right now. You don't want to keep buying this company and over allocating and overexposing yourself because you're exposing yourself to unnecessary risk of losses, but you also don't want to sell the current stocks that you have right now because you could kick yourself in the future. Right now, the PLTR share price is trading at a premium of $8.16. However, professionals believe the company should be worth anywhere between $6 to $20 over the next 12 months. Now, Morgan Stanley recently came out with a price target where they lowered their $11 price target down to a $10 price target. So feel free to do with that what you will, but I personally think that Palantir is trading at a slight premium. I would rather have my average cost basis closer to that lower end $6 mark. But again, I would love to hear your comments down below. If we look at their overall financial projections, including but not limited to their earnings per share estimates, I would say this company is looking pretty positive considering that they're supposed to become profitable on a GAAP basis in 2025. Now, quarter 3 of 2022 and quarter 4 of 2022 could be rather dicey considering that their year-over-year EPS growth is going to be negative. But past quarter 4 of 2022, and I've projected this and predicted this in past videos, that getting through 2022 is going to be very bad, and I anticipate that the stock price will drop further. However, in 2023 onward to 2025, we can see that this company is supposed to be growing at rapid rates, considering that their EPS is supposed to jump 112%, 189%, 34%, 31%, and 35%. So overall, this is a very positive trend that we are seeing for their EPS. But now let's jump over and look at their revenues. So the consensus revenue estimates for 2022, 2023, and 2024 are growing at a year-over-year CAGR of 23%, 24%, and 25%, like I alluded to earlier. This would make their revenue for 2022 come in at $1.9 billion for 2023, $2.37 billion, and 2024, $2.97 billion. And this clearly is going to lower their overall forward price to sales ratio, and by 2024, they have an amazing forward price to sales ratio of 5.58, which is very competitive, particularly in their current software space. But if we look at the overall projections, we can see, if we project out all the way till 2030, we can see that this company is clearly a good company to hold on to. You can see their overall revenues, their revenue growth percentages, their earnings per share, as well as their forward PE ratio on top of current stock price predictions. Now, I personally think by the time 2025 comes around, the company's going to be trading between $21 and $34 per share, according to the Financial Prophet, who's the author of this Seeking Alpha article. However, despite these very, very juicy and lucrative price targets that go as high as $150 by 2030, if you're a long-term investor, these are the price targets that you want to look at. But again, price targets are based off of DCF models and other financial projection models, but this is not a guarantee that the company will meet these stock prices. These are just guidances, and they should not be taken as what the company will actually achieve. It's more of just a guidance or a guardrail of it's going to be trading around this as long as the PE ratio is maintaining constant, because there are assumptions that go into these various models. Now, with that being said, there are still risks here. The growth story for Palantir is consistent and strong, being above a 20% CAGR, but like I said in the very beginning, the shares are not cheap by traditional metrics. This company is trading at a slight premium, but if you're not worried about the slight premium that it's trading, and you're not worried that it's going to fall even further, and you're willing to hold this company until 2030, regardless of what the stock price does in the short term, then this could be the stock and the best buying opportunity right now. But again, don't overexpose yourself. The only big problems that I would see from Palantir is, aside from their stock-based compensation, would be if Palantir lost favor with the United States government or the UK government, or if the company had a data breach. This would send the stock price absolutely plummeting down, and honestly, it would be very difficult for this company to recover from that. But if these risks are carefully weighed, and you understand the risk to reward ratio, and you understand that you're buying this company at a premium, this could be a long-term buying opportunity depending on what you think of this overall company. Also, make sure to look forward to their upcoming earnings report, which is going to be in the beginning of November. Now, clearly it's going to be past SoFi Technologies, but I believe this company will be releasing their earnings report on November 7th, so clearly that's something to look forward to, and I will go over their current and future projections for their earnings per share, revenues, and other financial metrics in another video, so we can determine if we want to trade off of this company as their earnings report approaches, and how that's going to impact their stock price either positively, negatively, or if it's just going to remain stable. So with that being said, I would love to hear your thoughts down below about Palantir and SoFi Technologies. Subscribe if you are new, smash that like button for more videos just like this one, and I will see you in the next YT video.